HSBC's chief economist, Paul Bloxham, is with me. Paul, you've kind of turned hawkish about the future of interest rate movements, which, most said could be down. You now say the next one could potentially be up.
Well, the game changer was last week's inflation print, and it was really a game changer. I mean, there was a significant upside surprise to underlying inflation. It was a 3% instead of a 2.6%, and I think that really does change things. Inflation is now the primary problem the RBA has rather than growth. I thought today was very interesting because they faced this big upside surprise, and it was going to be interesting how they dealt with it. I think they did a lot of contortions with their forecasts to still justify the idea that inflation is going to head back towards the midpoint. And of course, now it takes 18 more months for it to get back to the midpoint.
But this is the point, 18 months. I mean, inflation was supposed to be defeated. We had it back in the box, 2 to 3%, looked to be trending down. And all of a sudden, this blip comes, and the Reserve Bank now says its forecast is that it doesn't get back into that box for 18 months' time. So whose fault is that?
Well, so the starting point is that rules out rate cuts, I think. I mean, as you said, and I think the risk actually is the next move's up rather than down.
So here you go. Have a look at this. This is the forecast that came out of their statement of monetary policy. This shows it and where their forecast was previously and where it is now. So it's not coming back down to its range. So that, as you point out, would argue that there's no rate cuts.
I think that's right. No rate cuts. And I think there's some risk that actually the next move's more likely to be up than down. That's the way we're seeing it. But in terms of thinking about who's to blame and how to think about this, I mean, we're not growing that quickly. Growth has picked up pace, but it's not growing that quickly. What we've done is run up against the supply side of the economy. We are operating at our full capacity, and that's what is evident in inflation picking up, even though growth hasn't picked up very much.
But if you go to that supply side of the economy, nobody is prepared to invest to put in that extra supply that we require because they can't get a return out of it. Nobody wants to build and construct because they can't get a return. There is a fundamental problem because we don't have productivity moving through our economy.
Well, that's right. So productivity is weak. It means the cost of doing things is high. Unit labour costs are still growing too quickly. And that discourages businesses from, as you say, doing the necessary investment, which would lead to the pickup in productivity that we need. So how do we go about fixing this? Well, firstly, businesses need to have more appetite for doing that sort of investment. If we want policymakers to help, we've talked about this a lot. We need to look at the tax system and make it more efficient. We need to look at increasing competition in the economy because that encourages businesses.
We need energy prices to be lower.
We need to look at the energy system, the availability of energy, and we need to look at the regulatory environment. I mean, this is the really big one because I think the thing that is really constraining the pace at which and the willingness that businesses have to invest and add housing supply and add energy capacity is the regulatory system.
So the government today, and the Treasurer, we'll hear from him shortly, basically said, hey, it's not us. The Reserve Bank Governor says, it's not us, it's not our spending. What role does government have in terms of A, the slow economic growth Australia's got, and B, this spike in inflation?
Well, I think this is all about the idea that the supply side of the economy is quite weak, and what we need is to get productivity to lift. And so we had a big national discussion about this back in August, and now we need to come through with more of the policy measures that actually lead to a pickup in productivity. I think this is all about that idea because the alternative argument is that the 1.8% growth we've seen in the economy over the past year is somehow driving all the pickup in inflation.
But it's
driving it because demand has run up against supply.
But that's substandard growth. If we got growth at 3%, inflation would be much, much higher than that.
Well, we can't get growth at 3%. I mean, that's what's evident from this pickup in inflation. That's where we're at.
I'll tell you what, good to have you on the program. As always, Paul Bloxham, many thanks for your time.